Will your gold climb in price in the upcoming US election? Today, we're going to discuss how a potential win by either Donald Trump or Kamala Harris could impact gold prices, what happens to gold around elections, and during the presidential terms. So let's find out. First, let's talk about the impact of a potential Trump victory. Now, according to a recent Bloomberg Markets Live Pulse survey, gold is considered to be the best hedge asset if the Republican candidate, Donald Trump, wins the presidency this November. Well, why is this? Well, because his policies are more likely to weaken the dollar and therefore boost gold prices. In fact, proponents of gold as a safe haven play in the case of a Trump victory outnumbered those picking the US dollar 2-1 among the 480 respondents to the survey. So simply put, around 60% of those surveyed believe the dollar will weaken if Trump secures another term. And this isn't really that surprising, as history does have a tendency to repeat itself. During Trump's previous term, the dollar slid more than 10%, while the spot price of gold rallied by nearly 60%. Now, Trump's election is running on a platform of tax cuts, tariffs, and weaker regulation, and these are viewed as inflationary on Wall Street, which could even force the Federal Reserve to increase interest rates again. So should the US experience what we would call a red wave in November, granting the Republicans control of Congress, then we would expect to see a further boost to gold prices. Now, of course, gold is already hovering very close to all-time highs. And what's this driven by? Geopolitical tensions, a growing deficit, central bank reserve diversification, and hedging against high inflation. And these factors are likely to endure regardless of the election outcome. But if we do see a Trump victory, then they're likely to be magnified in this red wave scenario. But do not expect to see dramatic things around the time of the election. And according to a World Gold Council report, which was released just last week, elections have not historically had a significant or even immediate effect on gold's performance. Now, yes, the World Gold Council research did show that gold does behave differently depending on the victory, but it argues that these results are not statistically significant. So this may suggest that gold is not responding to the party affiliation of an elected president, but more likely to the expected effect of specific policies. So what about gold price gains during the term? Well, as we said, we saw some punchy numbers under Trump's first term when the price of gold climbed by nearly 60%. Now it increased by nearly 30% pre-COVID and slightly over 30% during the pandemic. And what about now? Well, under Biden, gold has moved sideways initially, but has since gained more than 30% during his term. And this is primarily due to broader macro factors and central bank buying. So once again, not entirely down to what is happening in the US and particularly in Congress. Now, a 60% gain under Trump might sound like a lot, but this isn't the biggest surge in gold prices under a president in the past 50 years. The price run-ups under both George W. Bush and Jimmy Carter were even larger. And as Bloomberg reports, this time around, the macro backdrop is even more favorable for bullion. The Fed is likely to start cutting interest rates in the fall, and central banks have been aggressively buying gold since 2022 to diversify away from the dollar, as they see it as the ultimate hedge and was becoming an increasingly complex geopolitical landscape. And speaking of de-dollarization, is this set to continue? Well, according to the Bloomberg survey, 2/3 of respondents believe a second Trump presidency will continue to undermine the dollar's status as the world's reserve currency. And interestingly, the results of the survey show that some respondents believe the dollar will weaken regardless of who wins the election. Sustained high deficits and lower interest rates could push this further de-dollarization strategy and potentially start a sovereign debt crisis. And apparently, this sentiment was echoed by a respondent to the survey who mentioned that this would be the same if Kamala Harris wins. Of course, that brings us to a very key point. Now, of course, the US election and the winning candidate, whether it's Harris or Trump, whether it's Republican or Democrat, can significantly impact the price of gold. But it's just one piece of the puzzle. Gold's status as a safe haven asset means it's influenced by global macroeconomic trends and geopolitical events as well. Central bank policies, currency strength, and major geopolitical events all play crucial roles in the shaping of gold prices. For example, the World Gold Council found that a 100 basis point increase in the geopolitical risk index, while keeping other factors constant, results in approximately 2.5% rise in gold returns. And this supports the idea that gold is typically viewed by investors as a safe haven during times of heightened geopolitical risk. And finally, a bit of a bonus for you. According to a recent NASDAQ article, historically, gold returns have averaged 11.2% under Democratic presidents and just 10.2% under Republican presidents. But who is president may not be the most crucial data point for investors. The control of Congress, which includes both the House and the Senate, has shown a more significant impact on gold prices. And when Democrats control Congress, gold has averaged a 20.9% gain compared to just a 3.9% gain under Republican control. Now, when neither party has control, gold has averaged a 3.5% gain. So, therefore, investors should consider the effect of policies enacted not only by the executive branch, but also by Congress. And what does all this mean? We talk about what's happening in Congress. We can talk about who's winning the election. We can talk about what's happening on a geopolitical level. Well, gold is doing very well right now, and it has done so well, not just because of who is in the White House. It is doing very well because it is a global asset that is impacted by events across the globe. Now, of course, policies and decisions made by the US will have an impact, but as we've seen in recent months, the gold market is starting to take direction from multiple sources. Whether those sources are worried about a war in the Middle East, de-dollarization, another pandemic, inflation, or even sanctions, they all turn to the same asset, gold, and no president will change that sentiment. So if you want to get on board and you want to find out how you can invest in more gold or perhaps silver, then check out one of our other videos now.